Hello and welcome. Today I am joined by David Smith, who is the fund manager for the Henderson High Income Trust. David, thank you very much for joining me today. Now, it's been a tough year for investors, with October's sell-off adding to equity losses. So I'd like to know, what is your assessment of the year and the key drivers behind the market movements?
Yeah, I think you've summed it up in one word there. It's been tough, really. The equity market, or the UK equity market, is now off 11% since its May peak, and you've seen quite an increase in volatility as well, in terms of which parts of the market were outperforming and underperforming, etc. I think there's been some key drivers there. Really, it's people are getting worried about global growth. The Fed keep increasing interest rates. What knock-on impact that might have on the US economy, which is growing quite nicely at the moment. You've seen a bit of slowdown in Chinese growth as well, and also you've got a bit of worries about political risks at home in Europe, really, not least Italian elections, but also Brexit and some of the key outcomes that will come from that, really.
Okay, and can you take us through your thoughts behind the gearing? It's currently at 26%.
Yeah, I mean, you have to remember that the majority of that gearing is structural. So what I mean by that, it's the borrowings that we use to back the bond portfolio. And actually, we've been increasing that bond exposure over the last few months, really. We talked about the Fed increase in interest rates in the US. Actually, you've seen yields on investment-grade credit in the US rise to quite more attractive levels. One of the things we can do within the trust is actually invest a little bit of money overseas, and we've been using that opportunity to just increase our bond exposure there. So actually the bond exposure has increased to 17% currently. So when you square that up against the level of gearing, actually the level of gearing towards equity is only about 9% at the moment. And again, when you look at the actual equities in there, there are still some sort of low beta, low risk equities within that are paying out good high levels of dividend income.
And have you been active in the equity market given the current sell-off?
So one of the new holdings within the portfolio is Coca-Cola Hellenic Bottling Company. So this company owns the rights to distribute and sell Coca-Cola products across European markets, the likes of Italy, likes of Greece, likes of Poland, some of those emerging markets as well. We like the company because actually it proves quite resilient in more difficult economic scenarios. But also there's a good margin story from the business. We've seen new management team come in, prove the operational efficiencies of the business. It's also got a strong balance sheet, which I think gives the business more flexibility to deploy that capital, whether it's accretive acquisitions or returning more cash to shareholders as well.
And finally, what is your thoughts on the market outlook as we head into 2019, and how is the trust positioned for this?
Well, I think the market, it's all about uncertainty, really. You've got fears out there in the market, slowing global economy. You've got the Fed, do they continue to increase interest rates? China economy, can that stabilise from here? And you've got worries across Europe, Italy we mentioned, but also Brexit close to home, and really who knows, but we'll wait and see on that one. But having said that, the global economy is still okay. We're still seeing growth there. And actually when you look at valuations, given the recent fall in equity markets, valuations are now below the long-term average, and in the UK market context, actually dividend yields are very high, certainly compared to the global indices there. So I think it's one of being well diversified, making sure you own good quality companies, so some of those more defensive names that typically prove robust in more challenging economic environments, but also owning some of those cyclical companies, but really focusing on the good quality ones, so the ones where you've got strong balance sheets, strong brands, good market positionings, and actually where valuations are starting to discount a too bearish scenario from here, and ones that have, again, focusing on that good dividend yield income. And the outlook for income, I think, across the portfolio is still very robust, really. I do have good confidence in the dividend paying ability of the companies we own within the trust.
David Smith, thank you very much for joining me today.
No, thank you.